Hey guys, this is Reese Trenio from the Vanguard team at Manor Realty. We're back with another monthly marketing report for real estate in Windsor, Ontario. With me, as always, is our teammate Renaud.
Hey, thanks for having me again.
Yeah, and let's not waste any time, man. Let's get down to the numbers so that everybody
Yep.
can get on with their day. So, guys, I think overall you're going to like what you see if you're looking to buy, which is stability, right? So when we talk about the market update in 2024 in April, what I love about this read is how many listings continue to dump onto the market. It's not like other years.
Yeah, absolutely. And as you just touched on there, it's an excellent opportunity if you're an investor client looking to build your portfolio, whether you're starting from scratch or you're just looking to add to it. You get a little bit of a time right now where it's a very balanced market before everything heats up. So it's an excellent time whether you're looking to do BRRRR strategy, just to build your portfolio. Jump in. There's still some price ranges where we're not seeing multiple offers quite yet. They're starting to creep in, starting in the lower price ranges. But we do have some price brackets where we're not seeing that, at least on the regular yet. So it's an excellent time to add to your portfolio.
Well, there are definitely bidding wars going on because you can see this at the bottom, guys, that last line, the sales to list price ratio. You're now over the asking price, which is implying that especially suburbia would be getting a lot of bidding wars. And we're not seeing them as much in the city proper, and we're not seeing them as much with income properties. What I will say as well, when you look at this, Reed, is this chart, this summary here, doesn't explain the concerns of economists, that measure these things and go, as soon as the interest rate drops, you're going to see a lot of market overheating again. And I mean, you tell the audience. I'm not going to tell them. You tell the audience what's happening with our clients right now.
Yeah, a lot of clients, I mean, they're already getting pushed out of price brackets. It's pushing them up higher. And,
Yeah.
a lot of people are saying, well, it's okay. I'll wait until the interest rates come down, and then maybe I'll have a little more purchasing power. With interest rates coming down, and I mean, you may get a slight bump in your purchasing power. They're not going to come down rapidly, start dropping full percents. But what that's going to do is mostly create buyer confidence as a market whole. So you may get an extra $25,000 in purchasing power, but when you're now competing against five other buyers, where a lot of them may be cash buyers, have a better financial situation than you, it doesn't really help your situation. In fact, it hurts, and it may push you to an even lower price bracket where now your goals are unachievable.
Yeah. Okay. You really nail it towards the end there. I don't know. I truly don't know if there's going to be a benefit from waiting. I do lean towards what you're saying is that when there's a scarcity of listings because of more buyers competing. I mean, I'd rather buy now, pay that extra 0.5% interest for a year or two, but actually have more choice on which property that I obtain. So from an income property standpoint, you want to pick and choose the best ones. If you got to pay an extra 0.5%, okay, well, let's find a way to save that within the confines of that investment property, right? And I
Yeah.
can't, go ahead, man. Go ahead. Yeah.
No, I completely agree with you. I mean, like I think we talked about it last month's video as well because we just keep hearing it from clients. But
Man.
you'd rather take that shorter term mortgage, maybe the variable mortgage,
Yeah.
and get in now where you're getting a property that you truly want. It's likely going to be a nicer property or fit your goals better. And 9 times out of 10 right now, depending on your price bracket, location, but you might not be competing. Whereas, if you wait until the summer season, much higher likelihood that the competition, and even if you're competing with one or two other people, you're not necessarily in the best position at that point compared to those people. So it makes the
Yeah.
road more difficult on you. Do yourself a favor and make it as easy as possible.
Yeah. Well, that's where I lean towards. Like, guys, you have to understand that we have teammates right now that are investors. And I'm going to use Stephanie Alstead as an example. So Stephanie will essentially buy any house plus AD additional dwelling unit that she suggests to the clients. If the clients don't buy it, her and her husband buy it. She puts her money where her mouth is. So she's done about 11 of these now in what, 3 years, Reed? Two
Yeah, I
years?
think so.
It's
Yeah.
been super, or 2.5, being super fast. But it's interesting when you watch people on your own team, like Stephanie, scrambling to find the next investment to do before the interest rates drop. It sounds
For sure.
counterintuitive, doesn't it? But it's not to her and to other people on our team, the investors. Like, we're sophisticated investors, guys. We're not just the real estate salespeople, right? We're making money too as investors. And we're scrambling. Some of the people on the team right now are scrambling before the interest rate drop because they know it's going to increase competition for the best possible investment properties. So I think the cons outweigh the pros waiting. I really do. Like, you guys don't see the swell of buyers we have waiting, and we're just one team. It's like, yeah. So if there's any lesson from this video, guys, I'm going to move on. But it's that is don't think there's some advantage to waiting because that's what everybody's doing. The whole herd is waiting, right?
Yeah, and if you do have any questions, sorry, just going to add to
Yeah,
what you said. If you do have any questions about your specific goals or your niche, like we've mentioned before, we have agents that work in all different niches, and that's their specialty. And almost always, they also are investors in that niche as well.
yeah.
So just like you mentioned, Stephanie, you guys reach out to us, and we can give you firsthand experience on what's happening, not only in the market, but in that particular niche. So you're looking to do ADUs. You talk to Stephanie, she's going to let you know exactly what's happening with the ADU market right now, who you're competing against, where the properties are located. Condos, same thing. Any type of property you're looking to do, we can give you a little more in-depth knowledge beyond just what's happening as a market whole, but what's happening within that specific niche, and what your best course is to hit your goals.
I had somebody at the gym this morning at like 10 to 6 in the morning. The owner starts asking me real estate questions, and she didn't know. Like, she was like shocked at the knowledge base, right? It was about adding residential units to the building, etc. And
Yep.
she goes, "Wow, you really know your stuff." And I said, "You by dumb luck, you happened to ask the one guy with the one team in town that actually does what you just asked me at 10 to 6 in the morning."
Yeah.
So yeah, I was laughing. It was just she was like, "You're a real estate agent," and it's like, I'm the one real estate agent that you would ask that question of in
Yeah.
Windsor-Essex, right? Or my teammates, but you know what I mean. Like, yeah, it was just kind of funny. Guys, I'm not going to dwell too heavily on this, but because month to month, who gives a crap, right? But the sales are slightly down from April last year. Think about all the listings we just showed you hitting the market. That didn't happen last year, right? 31 days to sell a listing. That didn't happen last year. 7 months of inventory on the market. That didn't happen last year. It's a really nice time to buy right now. It's the calm before the storm. It's nice. It's nice right now. Yeah. So, and I'm with Reed. So a variable rate, he mentioned earlier, you could go variable rate. Look, a variable rate hasn't, and I haven't talked about this in a long time. Variable rate hasn't beaten a fixed rate since I was born. And I'm an old dude. I'm 49 years old, right? And so there's no problem going with the variable. And you might say, well, the variable's higher than the fixed rate right now. Why do you think? Because the banks know how much that interest rate is going to drop. They all do predictive models. They all have the big six banks all have armies of economists, right? And all they do is figure out where that interest rate's going. And so when you're going to a bank and you're saying, Mr. Banker, I want a fixed rate, what you're really saying to the banker is, Mr. Banker, I don't want to take on any risk. I want you to take on the risk with the mortgage. And the banker is going to hedge his bets or her bets, right? So some of you, I'm going to nerd out for a second, but if you know the general Bell statistical curve with the two standard deviations, essentially the bank is going to win on a fixed rate 98. Oh, am I going to get this right? 98.5% of the time. 98.5% of the time. So if I gave you those odds to go to the casino, would you go to those odds with the casino? Of course you would. So go with a variable rate. No shame in that. I go variable rate on everything, right? That's Grandpa Reese's preaching for the day. Yeah, gather around,
No, it's
kids.
good stuff.
Gather around, kids. Average price up 0.47%. We're so used to seeing rapid gains that looks like nothing. And I pointed out to Reed before the call, what does that equate to over a year, right? It equates to 6%. Reed, what's the Canadian historical average property value gain?
About 5%.
5%. So literally, that rate right there is 16, 17% higher than the Canadian historical average of 5% a
Yeah.
year. So you go, 0.47%. No, that's still pretty strong, man. And you can see it sort of with the graph there. The yellow graph is this year, and you're going to see that number continue to creep up, especially with the interest rates coming down and the fact that as of now, even though all three levels of government are just scrambling to speed things up and rip up red tape, et cetera, the reality is, and Reed and I know this as developers ourselves, is we're not building fast enough yet, right? So you're going to have those huge supply and demand issues still as affordability comes back with dropping interest rates, and that's going to cause both rents and housing prices to go up,
Yeah.
right? Market activity. You want to speak to this?
Yeah, I mean, the biggest part of market activity for this month and why it's up, I think, is the new listings, like we talked about, that are coming onto the market. So, I mean, it just keeps going back to the same thing. There's a number of listings out there. On average, I think we're roughly at 30 days, 30 days on the market, 31 days on the market. So a very fair, balanced market. Most people call it slow when I talk to them because I think, everybody's got recency bias of, the last handful of years, and that became the norm.
They've forgotten all perspective. They've forgotten all perspective. Yeah, this is actually still a robust market. Yeah,
absolutely. And so if you're selling your house in 30 days for, I think we were at 102%, just over 102% of the list price. I mean, you would still say that's a pretty healthy market as a seller.
Yeah.
But with the new listings coming on, market activity up, again, as a buyer, there's opportunity there that hasn't been there for the last handful of years.
Yeah, think about it, guys. The overall market activity is up about 9% because of how many listings have been going up because the sales are down, right? Remember, the sales are down to 452 for April from 490, right? That's like a 12, 13% drop, I think, or 8%. Is that it? 8%? Well, there you go. What do I know? Yeah, so an 8% drop, but your overall market activity is up 8.5%.
Yeah.
Then that's from the simple surge of all the listings. And guys, I did mention this on a previous video. That greases the wheel. When you start adding all those listings onto the market, people, it's kind of like the unemployment rate. You don't want the unemployment rate to be too low because you want that freedom of movement between different jobs, right? So the ideal unemployment rate in Canada or in the Western world is 6.5%. That's what you want to see. That's perfect, right? When you start seeing it go down to 4 and 3%, your economy is actually in a bit of trouble because you don't have enough workers, and workers can't move from job to job because there's no job to jump to improve that situation. You see what I mean? So it's the same thing with the market activity. When you see all those listings hit the market, people are much more able to move, right? The baby boomer that's got the huge house and the stairs they can no longer navigate, the kids moved out. They want to downsize to a ranch in the same neighborhood or a condo in the same neighborhood. They can't until like this year because there just hasn't been that ranch or that condo available for them to move into. So that family that's now got 4 kids and isn't stopping, they can't move up to the bigger house because the baby boomers are still, see what I mean? So now you're going to see a lot more movement, a lot more sales as people adjust to their lifestyles, right? Reed, you want to speak to this one? It's funny to me, man, but it's the Windsor curve, isn't it?
It is, and it's very similar to what we talked about last month. The curve hasn't changed too much, but yeah, you can obviously see starting in the mid 300s and going up to about 700,000. The vast majority of the sales are all bulked into there, and it follows along with basically what the average home residential sale price is in Windsor-Essex County. Again, as we talked about last month, we do expect this to shift to the right as interest rates come down, buyer confidence improves. That number, you'll start to see more creep into the 6s, the 7s, the 8s, like it was the last few years. So if you're seeing this, if you're in any of those price ranges where, things are starting to tighten up, you'd probably want to do yourself a favor and get into the market as soon as possible as that thing shifts. And again, talking about purchasing power, just because your purchasing power increases doesn't necessarily mean the situation as a whole in the market is going to increase for you as well.
Right. Right. Yeah. And I mean, guys, if you look at the tail end there, sort of 300,000 and less, there's about 30 sales there roughly. And we did about 3 or 4 of those A couple of them were, completely gutted to the studs properties where somebody ran out of money, and then one of our investors would pick them up. One was definitely a condo. That was Sadie Morrow. So you can still get some condos in that sort of $250,000 to $300,000 range. So especially if you're looking to move down to Windsor or invest in Windsor, those are a nice way to go still, right? I used to live in a building downtown called Victoria Park Place. It's still a very well-run building. I find the cost to value is still fantastic, and that can still keep you under 300,000, right? And as the prices continue to go up, that's something you guys can look at, certainly, especially to get out of renting and move into ownership, or alternatively to rent out to like a law student at the University of Windsor, right? But yeah, it reads right. The bulk of your sales are going to be in here. Investors with us tend to be between about 300 and 400 grand. That's where you're getting like a nice house where you're adding an additional dwelling unit, or you're getting a duplex, or a student rental property. There's still a lot in that kind of wheelhouse down there. But that sort of curve, that Windsor curve, which is basically a tower, that will keep creeping to the right, guys. We've already been watching it creep to the right. Like Reed and I remember in very recent memory, that whole thing would have been one notch over to the left just about 6 months ago,
Yep.
right? So it's moving across as the prices go up. All right. So guys, appreciate you being here. Reed, appreciate you being here, man.
Anytime.
He's so sick of me, guys. This is Reese Trenion from the Vanguard team at Manor Realty. As always, hit us up. You can subscribe. You can message. Our website is thevanguardteam.com if you want to find us. And yeah, we can get you guys started, whether you're a homeowner, whether you want to move down here, or whether you're an investor. We all hit those check marks pretty darn nicely. Until next time.